In this video I will show you how to use Volatility 50 index, which is synthetic indices, with a Pip calculator that you can find a link below inside the description. This Pip calculator will help you to calculate how much you could make or lose on a trade before you open the trade. So you can also minimize the risk per each trade and also enter with the values that are acceptable for you. So this is the Pip calculator where you can select the symbol in the drop-down menu, and for this case I will use Volatility 50 index. You will see that this Pip calculator will have predefined value for the contract size and also will have a point value predefined already for the derivative broker. If you are using any other broker, you can change these values. For the volume, you can also enter any value that you would like. I will put here 1 as an example. Below that, you have 3 fields where you can enter the entry price, you can enter the stop loss and the take profit. So when you enter these 3 values, you will get here a stop loss difference, which is a price difference between the entry and the stop loss, and the take profit difference will be a difference between the entry price and the take profit. Simply click calculate, and above you will here get a value in the US dollar. If you put here as it is right now with the volume 1, with the contract 1, you would get the value for 1 pip. In this case it is equal to 0 because the pip here is on 4 decimal points, and that means when you go here to the chart, you will see that the price for the Volatility 50 index has 4 decimal points. So if the price change for 0.0001, this will mean the price has changed for 1 pip. The contract size is predefined by the broker, so you need to check that with your broker for the Volatility 50 index. In this case, inside the MetaTrader 5, you can simply check that by going here inside the Market Watch, click the right mouse button, go to specification, and here it is, a contract size defined by the broker. Here you have also a tick size, which is 0.0001, which is the smallest price change for this symbol. And below that you can also see what is the minimum volume that you can use and also what is the maximum volume. So in this case, for the Volatility 50 index, we have 3 as a minimum volume, and also the maximum volume is 1000. So when you calculate for this Volatility 50 index, this is the number 3 that you need to put here. But in this case I will leave 1 just to calculate what is the pip value for 1 pip. So below this one you have here a table which you can also download. Find the link below in the description, and you will have also some other details that you can check here, how to use the pip calculator and also how to calculate the pip. Let's go with the examples. I will show you 2 examples, 1 buy and 1 sell order, so you can see how to use this pip calculator and calculate how much the stop loss would be and how much the take profit would be. So let's see for the chart. Let's, for example, put here a downtrend so we can see where the price is heading. Now we can see that the price is heading inside this one channel. It was gone outside of this one, but it seems it could go down more. So for example, let's put here the current market price, and the stop loss would be above this one, above these highs. So this would be a stop loss, and for example the take profit would be below this. So if you would like to calculate how much money would this be if you open currently the market order and you put stop loss here and the take profit, you simply copy these 3 values here inside the pip calculator, 154.7200, and enter the stop loss would be 158.2461. The stop loss is above and it is this price, and the take profit is below because we are expecting that the price will go down, so we put enter here 148.8837. Click calculate, and you get the price difference for the stop loss and the take profit. If you copy this one here in the point value, click calculate, you would get that you would have stop loss equal to $3.53 with the volume 1 and contract size stays 1. For the take profit, you would enter this one here, click calculate, and you would get that you would make $5.84 on this trade if you open this one. So if you are satisfied with this one, you simply open new order. But have in mind that the minimum volume for the Volatility 50 index is number 3, so you need to put this here. You need to put number 3 here. Click calculate and you would get different values which are 3 times higher than the before, so you would make $17.51 with this take profit. Let's put this one. You can see here inside this window there is a gray button, so this means something is wrong, and what is wrong is this one, because this one should be minimum number 3. We have seen that the minimum volume for the Volatility 50 index is 3. You can see it here, and the maximum one is 1000. So let's enter these values. The stop loss would be this one, and the take profit would be, copy paste this one here, and we open a sell order because we are expecting that the price is going down. Sell by the market. Okay, these are the values. Just a minute, I need to remove these lines. So enter the market price, which is here, 154.2461. Click calculate. The stop loss is equal, the same, and the take profit is here, it is the same. So you can see that the stop loss difference is 4 and the take profit difference is 5.3. So when you copy this one here, calculate, you get that the stop loss would be $12. If you go here to the chart, go with your mouse over this one, and you can see that the profit would be 10.48. So what is difference? What is different between these two prices? Let's check what we have entered wrong. Entry price is 154.7529, and I have here the incorrect entry price. That's why the price difference is wrong. So we'll put here 7529. The stop loss is the same and the take profit is the same. Click calculate. Now you can see we have different price change for the stop loss. Enter this value here. The volume is 3, this is correct, and the contract size stays as a 1. Now you can see it is 10.48. Let's go to the stop loss and check how much it is. It is the same value, minus $10.48. For the take profit, you do the same, copy this value and click calculate. You would get $17.61 you would make on this trade. Let's see, do we have the same value? It is 17.61. So you can see that you can use this Pip Calculator for the Volatility 50 index to calculate the correct values for the stop loss and the take profit, so you can know before you open the order how much you could make and also how much you could lose. Now let's close this one and open a new order where you are expecting that the price could go up and stop loss would be here just below the low points, and the take profit could be, for example, the price could reach this price level here. So let's enter the entry price would be 154.6896 and the stop loss would be below that 153.5953 and the take profit would be above 158.2157. Click calculate. This is the stop loss difference and the take profit difference. I will leave the volume 3 because it is the minimum volume that you can use on the Volatility 50 index. Copy this one for the stop loss, paste and calculate. We get $3.28 would be a stop loss and the take profit would be 10.58. If you are satisfied with that, you can simply come here and open new order with stop loss predefined, here it is, and take profit, copy paste, here it is. The volume is 3 as the minimum one, and click buy because you are expecting that the price will go up. Here it is. Now let's put here the correct value for the entry price because it is slightly different, 74 0.86. Click calculate, copy this stop loss value here, click calculate, you would get $3.46. Let's check on the chart, is the same value, 3.46. It is the same stop loss value. Now let's do this the same for the take profit, 10.40. Let's check it here, 10.40. Now you can see this is the way how you can calculate the stop loss and the take profit before you enter the trade, so you can calculate how much you could risk per each trade and how much to expect. If you would like to change the volume, for example to 5, you can make that to get the number of US dollars that you are targeting with the take profit or the stop loss. And when you find the correct values for how much you could lose or how much you would make, then you can enter the volume inside the new order, so you can simply calculate everything before the opening order, so you can prevent testing on the real or testing on the demo account what would be the values. If you like the video, click the like button and subscribe. Below inside the video you will also find a link, download link for this PDF, so you can download it and check all that is inside. You will have also a table with the synthetic indices. So see you next time and happy trading!